Hey everyone, welcome back to another episode of AWM Insights. Justin Dyer, your host here, Chief Investment Officer of AWM, joined as always by Mena, Hanna, my right-hand man, portfolio manager here at AWM. And boy, 2026 continues to run here. It's just like never a dull moment. Both just internally, right? We had a great high performance summit, which many of you know was our annual offsite, really kicking off the year with a bang, which was awesome. But certainly in markets, right? Markets have continued to be active, I guess, let's call it. And certainly no less than the precious metals. So we're going to talk about that a little bit today, just kind of riff on that continued narrative, how we think about it, how you should think about it, what's driving it, all of that good stuff. So, Mena, why don't you kick us off? What are you seeing? What's updating you, or what's captivating your attention? Any different narratives at least you want to jump into with respect to the precious metal trade?
Yeah, I'm honestly shocked by everything that's going on in that market right now, how volatile it is, how fast it's moving. We were just in a meeting for like an hour and 15 minutes. And in that time span, gold was up 5%, and then it sank 10%, and then sort of reached a midpoint at like $5,300. So crazy activity in an asset class that's massive. Like, people forget that gold is $36 trillion of total value as an asset class. So it's almost enough to wipe our national debt. If we could all just band together and use the gold to pay that off. But it is a massive asset class, and to see swings like that in an asset class is crazy. It's literally $3 trillion move in a matter of a couple of minutes, which is, not normal. How do you think about just gold, the activity, the fact that it stayed relevant for so long? Like, how do you process that?
This time is no different, I think, is the quick take. You and I were talking earlier today, and there are always assets that are moving like this. There's probably assets that are actually moving even greater than gold has. They're not the literal bright, shiny object that necessarily is getting the attention, right? Their market value is not what you just said, $36 trillion. But you dissect the S&P 500, you're going to see an insane range of returns. You're going to see companies that have absolutely killed it and significantly outperformed the S&P 500, and you're going to see companies that have completely, floundered, right? In many cases, just gone bankrupt or gone to zero, right? And so you always have to know that there's this crazy dispersion when it comes to investing, and this is true across all markets, if you will, public markets, private markets. It's why diversification works. And so, for me, I don't want to sound, trite and just say like, this time is no different, right? It is interesting when you're seeing movement like this. Certainly the reason why gold and other precious metals and silver specifically are behaving the way they're behaving is interesting, right? The geopolitical implications, the world that we live in, the tensions that are, fairly palpable, like that is a little different, but there's always going to be different drivers of return and performance with respect to asset classes. What I would say, kind of the take home, the lesson I want to make sure we convey to everyone is you can't go chasing your tail, right? Just because you see a good asset class, most of the time when you see it, and it's already kind of done what it's done, it's too late, right? Or you're succumbing to the age-old adage of buying high, selling low, which is exactly what you don't want to do, right? And so you need to have the going-in plan, right? The going-in playbook, as we talk about quite a bit around investing for the long term, and know and be okay with the fact that there are going to be investments that you miss. But we know with high probability that we're going to hit the number that we need, even if we miss the gold trade, right? The often overlooked piece of it is you miss the crazy volatility that often comes with investments like this. Like, go back to the meme stocks around COVID and a lot of the craziness that was happening there. Like those are just behaviors that show up time and time again within markets. The actual asset that is exhibiting those movements changes, but and the reason why, et cetera, does change. But you can't build a predictive investing or a high confident investing approach chasing returns, right?
Totally. Now, I'm going to throw you a little bit of a curveball, but are you personally invested in gold?
I am not personally invested in gold in my own portfolio. You know, and again, it's I put my money where my mouth is, right? We generally invest 100% alongside of our clients. It's an asset I don't fully, I don't want to say understand, right? You can understand the narrative around gold. You understand it's a quote unquote chaos hedge, or it's a store of value. You know, there's a list of classifications that I think are completely legitimate. Just for my own future planning, I want to invest in value creation, value additive investments where you see a business, you see a property, a real asset that is creating value, and you can then apply valuation formulas to that to come up with what you think that asset is worth now, right? That is investing. I think, you know, not using this term as a negative term per se, although I think a lot of people conflate these two things. Investing is that, right? Investing is buying future cash flows at today's price, at today's present value, right? And believing that present value will grow into the future. Gold is far more of a speculative asset. You are buying it expecting someone in the future is going to pay more money based on feel, based on technicals, or based on just, you know, supply and demand. There's no fundamental reason behind that per se. And so I just don't feel comfortable with that.
Totally. And I actually got into an argument, I shouldn't say argument, healthy debate with one of my friends. There was around 3,600 tons of gold mined in 2025. Obviously, that ramped up as gold price moved up. There was more of an incentive for people to mine more gold. But the fact that more of it is being created, found, discovered every single year, the only way that you're going to make money is that more people are going to want it. The demand side outpaces that supply side. We've all gone through the supply and demand economic class in college. We know what that actually looks like, but that's a lot of gold. And at some point, I'm guessing people are not going to be all that impressed with gold. And it's just not going to be the hot asset, the hot commodity. And when that happens, who knows what happens to the gold price? Yeah. Industrial gold price is like $200 an ounce. So yeah, who knows?
Versus where are we? 5,400?
Yeah.
Something like that. That is a crazy spread.
Yeah.
I mean, just wait until, you know, who knows, Elon Musk or someone figures out how to launch a rocket and land on an asteroid that's just full of gold. You know, I don't expect that to necessarily happen in my lifetime, but right, that's a possibility. There's 100% a possibility. I think that another interesting, just talking about this kind of broader asset class, store value asset class in general, is what's been going on with Bitcoin. I'm actually pretty surprised. I mean, not to say Bitcoin has done poorly recently. It has done poorly recently, but like, you know, over the last 2 year time frame, I think Bitcoin is a digital gold, and to see them not move in correlation with one another, it's not to say they have to just because they are. I think digital gold is a plausible explanation for Bitcoin. I am just pretty surprised that there's been pretty extreme divergence between the two.
Yeah, I think it is enforcing and reinforcing what we're saying, which is you don't buy an asset for scarcity, hoping that there's just more demand at the end of it. Bitcoin's trading at $84,000 right now. It's down 20% in the past year. So yeah, I think this is just a speculative push into one asset class. And what we've seen historically is that does not end well. So we'll see how it plays out, but odds are against against those buying gold right
Yeah,
now.
totally. And kind of bringing this to, I know we've talked about precious metals and gold a lot over the last few podcasts, but it's important, right? It's obviously catching a lot of attention, a lot of eyeballs. And it could continue to run from here. I mean, that is kind of the definition of a speculative asset class. What we really take a step back and always ask ourselves when stuff like this is going on, hey, has our general philosophy around investing, which is more geared towards investing in value creation assets, has that changed? Has anything changed in the world? Yes, the world's a lot more uncertain right now. There's tension, there's some conflict, all that stuff, and that's driving gold. We don't know when that's going to end. That could end overnight. It does seem like some of the behavior right now with gold is a little frothy. That could continue, like I've said. And those are just investment strategies that we don't really subscribe to. I don't think they're strategies, really. If you think about the true definition of that word, we want to have discipline, we want to have diversification and high confidence and predictability over long-term expected returns. And when you look at things like Bitcoin, you look at things like gold, we just don't really see them.
It's not how you're building your 100-year family. And you can learn these lessons from other asset classes. We've talked about diamonds before. Gold, they're going to make gold at some point in a lab, just like they're making diamonds right now. The diamond index is down 50% almost since 2022 with lab-grown diamonds. So yeah, you want to learn these lessons in a way, in the least expensive way as possible. And unfortunately, some of these lessons can cost you your 100-year family if you go off the rails. And we've seen it. We want to be there to give good advice and protect against that. But yeah, you can take a look at other asset classes and see what happens in similar times. Yeah.
Yeah, awesome. That's a great place to end. If anyone has questions, continued questions around gold, precious metals, Bitcoin, or otherwise, right, always send them our way. Mena, give them the number.
Yeah, 626-862-0355.
Perfect. And we'll keep going here in 2026. Hopefully keeps being an interesting one and markets keep working in our favor. But until next time, own your wealth, make an impact, and always be a pro. Thanks for listening.